have the daily chart for Supermicro Computer Incorporated, stock ticker SMCI. As we can see here, share prices did close the week, trading under a bit of pressure here. We have been seeing declines in this stock for several trading sessions at this point. Most of these declines started the July 15 trading session when the stock itself was posting highs of 963.30. As we can see here, we have seen a steady decline since then. We've fallen through all of the major exponential moving averages, except for arguably this 200-hour EMA. This is the daily chart, the 200-day exponential moving average, which would be this blue line here. So here, we did see a bit of a breach here of this 200-day exponential moving average, but we didn't see a daily close below here. So the break itself is not exactly confirmed, and we did see a bit of a price movement here into the final trading periods of the week. Calling these positive price movements, it's a little bit of an exaggeration or a little bit generous, perhaps you could say, because the candle that we're seeing here is really sort of a doji pattern candlestick shape, and this really isn't a convincing move to the top side, and it really doesn't suggest much of a reversal is actively in place. So currently, what we're really looking for here will be whether or not prices are able to bounce from this 200-day exponential moving average. As we can see here, the price lows that were generated came in at 663.20, and this really is a level that we've been watching closely for quite a while. As we can see here, the 660 level is the 618 retracement of this broader trending move. And as we can see here, we do have some historical support, which can also be found in this area. The price lows from April 22nd came in at 671. So we're roughly $10 away with this historical support zone. And currently we are trading roughly in this region at the moment. So, overall, this is an important level to watch to the downside here, this 660 level. This will kind of unlock further further potential for losses if we do see a downside break here. It is a critical level, so there is still a scope for a possible bounce, but we're already trading through several moving averages, and then at the same time, the indicator reading is showing a bearish condition in the relative strength index. Specifically, we can see that bearish momentum has sort of characterized the market ever since the middle of February. So, this negative trend here has been in place for quite some time. That said, we also do need to take note of the fact that we have sort of entered into oversold territory at this point. We can kind of drill in a bit here and take a closer look. You can see that we just touched, this 30 mark in the relative strength index, and we have started to roll over out of this area. So that on its own is encouraging. What we would really like to see here would be a break of this exponential moving average. This purple line at the bottom of the chart is the relative strength index. The yellow line that we're seeing here is the exponential moving average of the relative strength index. So if we were to see a rollover out of oversold territory and then an upside break of this yellow line, those would be bullish signals, and it would suggest that we would at least need to retest this downward sloping trend line in the relative strength index momentum reading. Given the fact that we are now rolling over out of oversold territory, this would also suggest that we have quite a bit of distance that we could travel before we would become overbought. So this would provide some good scope for the top side if share prices themselves are actually able to find strong support. There is some technical evidence that this could be occurring at 660. The only reason that I would be a bit reluctant to suggest that this is actively occurring here is because the bounce from here has been so minimal. You'd really like to see a larger body on these candlestick shapes, and we're just not really seeing that. I mean, into the close on Friday, into the end of last week, the trading action was somewhat subdued. We are seeing a decline in trading volumes as well, as we can see here, and there are many red bars in this trading volume reading. So there is still a fair amount of pressure here. And whether or not this stock succeeds or fails in the near term, as in next week, could largely depend on the market as a whole. I mean, if we start to see a continuation and the selling pressure that's been in place since the middle of the month of July, this would put the stock under a fair amount of pressure, presumably because most of this recent selling pressure really uh, has been centered on the technology space, the technology sector. So, what we would really need to see here would be a bit of a bounce here, possibly some increase in the trading volume, and then, trading volume in the positive direction. That would start to look a bit more encouraging. But, for the moment, this 660 level is looking quite weak. And if we do break below here, this could target prices closer to the $500 mark because the 786 retracement of this dominant trending move comes in at 503.71. The way that I'm arriving at these numbers comes from this trend wave here. I can sort of move around this white line here. This is the distance, the price distance that's being measured here. And as we can see here, the lows from the middle of January came in just above the $300 mark, just above 305. And then ultimately these price highs came in at 1229. These posted on the 8th of March 8th. So, if we're looking at this trend movement here, a break of the 618 retracement would target the 786 retracement, which comes in just above 503. So that would be a fairly significant drop from here if that were to occur. We don't really have any other historical support zones here, and the exponential moving average cluster has already been broken. So if we lose this 200-day exponential moving average, there's really nothing else in this area to support prices. And then we would also have the fact that the reading in the momentum indicator remains bearish. So this would suggest that the overall momentum trajectory or trend, is still pointed in the downward direction. So overall, it is encouraging to see that we're kind of slowing the declines at roughly 660. But we really do need to see a bit more of a turnaround here. An early indication that this downtrend would be ending would be seen if we were to break above this exponential moving average cluster. Currently, this would mean roughly a break of 830, because this is where the 50-day exponential moving average currently rests. So this is the level that I would be watching to the top side, and then definitely to the downside. The main level to watch comes in at 660. So here's the current market analysis for Super Micro Computer Incorporated, stock ticker SMCI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.